Hi, I'm Steven, the calculator guy, founder of DeFi Dojo Discord, and today we're going to be talking about CPVs. What are CPVs? They are counterparty vaults, and they are all the rage right now in the world of DeFi. We're going to look at some of the most popular ones, some of the lesser known ones, the risks of CPVs, and why they have such crazy, ridiculous, awesome yields. Without further ado, let's look at the most popular CPV, which is GLP on GMX. A lot of three-letter acronyms here today. So the first one, GLP. If you don't know what GLP is, then you've been under a rock for way too long, and I am so happy you're finally getting out. GLP is an index which is composed roughly of 50% stables, 50% ETH and BTC, and it is the counterparty for the leverage traders on the GMX trading platform. So if you want to go, trade long, short some major blue chip assets, you can do so on GMX, but you need liquidity to do that, right? The liquidity is provided decentrally by means of GLP. So GLP stakers who stake this index gain a portion of the platform fees as well as realize the traders' P&L. So if the traders win, the value of GLP goes down because it has to pay out those traders. If the traders lose, the value of GLP goes up because the traders sort of pay their losses to GLP. In a sense. Now, currently, GLP staking earns about 51.61%, which seems amazing. But you might be asking, why would you want to counterparty leverage traders, right? They could certainly be winning outsized returns, which would kill the value of GLP. And we've sort of seen a little bit of this happening since mid-January. But for the most part, it is like a casino. Traders lose disproportionately over long periods of time, unless there's some sort of trick or exploitable mechanism that's at play. Now, is there one available on GMX? That's yet to be fully known. However, there has been at least one instance of someone gaming GMX for a slight profit, sort of unfairly, maybe exploiting their mechanism. Let's look at some metrics. So all-time metrics show that the GLP Vault has gone up in value since its inception because traders have lost a cumulative amount of 15 million. Now, if you've been in since mid-January, you're probably feeling the heat since mid-January. Traders have won about 25 million. Now that's pretty crazy considering that traders tend to lose over time. Maybe it's because there's a long bias, the markets have been rallying. Who knows? Nevertheless, if you've been in since January, your value of GLP, your intrinsic value of GLP has gone down, and you've sort of been hoping that the emissions, or rather the yields from the trading fees, has been enough to pay off those losses. Many protocols have been built on GMX and utilize a GLP as an underlying derivative, but this is important information, right? How much traders are losing on this platform. That's something you want to look at when looking at these counterparty vaults. Are the traders disproportionately losing, as you would expect with basic degen leverage trading behavior, or are they disproportionately winning, which might indicate some sort of unfair advantage that a platform is offering that may be exploitable? So here, traders are losing. However, there's been a concerning rally for the past 3 months. All right, one of the protocols building on top of GLP is Jones Dow. Huge shout out to Jones Dow, great protocol. They have a leveraged Delta GLP vault. Now remember, you have leverage exposure not only to the yield, which is fantastic, from 51% to 130%, you also have leverage exposure to GLP. So if traders are doing fantastic, you're doing not so well. If traders are doing terribly, however, then congratulations you, well done, you're getting paid. There is also the gamma neutral USDC vault. I'm not going to get into this in this particular video simply because this is not technically a CPV. This is not a counterparty vault. This just provides lending liquidity to the leverage Delta GLP vault. Very similar to how Rage Trade works. I think I've done a video on Rage Trade in the past. Check that out if you want to understand the mechanism a little bit more. Nevertheless, good stablecoin yield. Another protocol that I love, we'll be having Pendle even doing an AMA in the DeFi Dojo Discord later this week, is Pendle. Mentioned it already. They have two different CPVs available here, GLP and GDAI. GDAI is denominated in DAI, which is a stablecoin. GLP, of course, denominated in a basket of assets, including stables, as well as Bitcoin and Ethereum. For the most part, there's like Uni and Link in there as well, but less than 4%. So here, what you can do is you can make long and short bets on the yield. But if you're just looking to get a yield on these two things, you have a relatively delta stable GLP and GDI vaults, both of which are giving great base APYs. Now that base APY is going to be paid out very much so in the Pendle asset, but Pendle has also been doing very well recently. So it's not the end of the world. Also, this is on Arbitrum. So unlike Pendle on Ethereum, you won't be paying exorbitant gas fees to collect your returns here. Or you can even use your Pendle and stake it for boosted APYs if that's the sort of thing that you enjoy doing. I know Pendle has a lot of partnerships on the horizon, and I've been really happy watching their growth in recent months. Okay, now there are so many other protocols of building on GMX, but in order to make this video not 30 minutes long, I'm going to move on to some of the other protocols that have CPVs. The first one we're going to look at is Mummy. So Mummy is a GMX fork on Phantom. You can see here that they have a base APR of 124%. However, it's really important to know that this base APR is a little bit disingenuous unless you're familiar with the old GMX mechanics, which I believe will come back one day. But here they have escrowed MMY. So you're getting a base APR, really a base APR of 50% paid out in Phantom. That's excellent. And then you're also getting escrowed MMY 75%. Now that escrowed MMY, you have to vest for an entire year if you want to realize it. But that escrowed MMY is also as you've earned it and as it is staked, you're getting 72% on that. Some in the form of more escrowed MMI, but also some in the form of Phantom. So your escrowed yield is also yielding some Phantom. So it brings the effective Phantom yield from like 49% up to somewhere around 53-ish, 55%. And that multiplies over time. So you do sort of have a compounding effect there. But there you go. Now, MLP is another one of these basket of assets, predominantly stablecoins once again, but with some Bitcoin, Ethereum, and now Phantom exposure. Bitcoin, Ethereum, and Phantom all together, making up about 26 plus 8, about 35%. So this one is a lot more stablecoin heavy, but it still does have some delta exposure with Phantom, Ethereum, and Bitcoin. That's MMY. That's MLP on Mummy Finance. I do know that Sifu was one of the earlier investors in MLP. Ox Sifu. People love to hate him, people love to follow him, and everyone tracks his wallet. So if you want to follow that, you certainly can. Now, the next one we're going to look at is one on Polygon. This is Metabol. This one's been around for quite a long time. I'd say it's probably one of the earliest CPVs that existed as a fork of GMX. Here we have MVLP. Instead of being a basket of assets, including Phantom, it's a basket of assets that includes Matic, as well as some liquid stake derivatives. My throat's getting dry. So here, 27, 18, so maybe a little bit heavier on the delta exposure, a little bit lighter on the stablecoins, where stablecoins here only make up, let's say about 20, let's see, 30, 36, 37%. So you have 37% stablecoin exposure, and then roughly 63% unstable exposure or volatile exposure. Now the earnings here, the APR is pretty small, 12% base APR, no boosted APR, but I also want, MVLP's over here. Base wrapped Matic exposure is roughly 50%. That's quite good. And then there's some escrow rewards as well. You do want to look at go to dashboard, they have stats here. You always want to look at the stats. Most of these GMX forks have them. You want to click on all time, or you can click in the last few months to see what the trader P&L is. Now here, this is excellent. You want to see traders losing. Traders are definitely losing on Metabol. That is a good sign that the CPV will be more profitable than on platforms where the traders tend to do well. All right, next one is Level. I may have to drink some more tea. I'm sorry, guys. My throat is so dry today. Just getting over a bit of a cold. Okay. Level is not a fork. That's the first thing you need to know about Level. It is, and not being a fork actually increases the risks in some way. That's not shade to Level. I love their protocol. But what it means is that the smart contracts are not equally as tested. They're not the same as GMX. So here you have 3 different tranches. Each one of these tranches is a CPV, and they have different levels of exposure to the traders. Now, the APRs are quite huge, and each one of these is also a different basket, sort of. Look at the senior tranche. You'll notice you don't have any cake exposure, just BTC, ETH, BNB, and USDT. But if you look at the junior tranche and the mezzanine tranche, you'll see that they have some additional cake exposure. So it's not much. If you look here, you can see that the cake exposure is less than 1%, but it still exists there. And over time, these have done pretty well. I know many people who are in these. I believe the senior tranche is probably the most, TVL-wise, senior tranche has been doing the best. Now, these started off at $1. So you can see that this is up, I think, 26% in its lifetime, which is phenomenally impressive. But I don't necessarily remember when these all started, so I can't tell you if it's like under the same time frame. This is up 26%, this is up 5%, this is up 12%. So I'm not sure if these all started at the same time. So nevertheless, Level has been doing well, has been getting a lot of interest. I think it's one of the, they have some of the most interesting CPVs, but I will say in terms of smart contract risks, I'm not saying that they're unsafe, I'm not saying they're unaudited, I'm simply saying it's a different risk than the GMX and GMX forks. All right, next one. This is the second biggest, actually. This is Gains. So Gains is G-Trade. G-Trade has a bunch of different synthetics, and actually pretty impressive ones. They have like gold, silver, some major indices from the U.S. stock markets, or from the stock markets. And they also have a counterparty vault of DAI, GDAI. It's sort of famous now. There are plenty of places to get yield on GDAI. One of the ones I already mentioned was Pendle. You can get 46%. And I think that might even be without considering the additional APY, but I'm not sure. The additional intrinsic APY of GDAI. If we look at Gains, here's the APR, the base APR of GDAI over time. Right now, it's sitting at roughly 11% on Arbitrum, 10% on Polygon, but GDAI is now a composable asset, which means you can take GDAI and go LP it in various places. I'm not going to tell you all the secret places you can LP GDAI, but there are a lot of very interesting ones coming up. There are also some places where you can leverage GDAI, so you can even loop it and crank that yield up. If you want to learn more about that, please go ahead, join the DeFi Dojo Discord and ask about it. We will tell you all the great places where that is possible. All right, next, Apollo X. So Apollo X was a centralized exchange, became a decentralized exchange, is sort of both right now. And now they're moving toward decentralization. They've launched their ALP pool so that people can trade against ALP rather than a more centralized approach to perpetuals contracts trading. That's cool. Now ALP has been going back and forth. Right now it's at 1.0119. This did start at $1, so you can see it is technically up, which means traders have disproportionately lost. However, it was as high as 102 just a few weeks ago. Now down to 101. So kind of a bummer, but the APY that you get paid in APX is 27, so that's 27% on top of the intrinsic yield of ALP that you get from Trader PNL. So I've been in this one for a while. I like Apollo X, but the yield might not be necessarily as juicy as something something like the ones we already mentioned. Nevertheless, still a cool protocol on multiple chains, but if you want to participate in ALP, you will need to be on BNB chain. All right, speaking of other vaults that I'm interested in, Pika. This is one that I have really liked for a super long time. So Pika has this CPV that's denominated in stables. It was one of the first ones that I found denominated in stables that wasn't GDAI, and it has done very well. So I'm a man of Dune analytics, and just look here. This is the Vault net APR. So I think another way of thinking about this is the Vault. Yeah, so it's the Vault net reward kind of minus Trader PNL. So Trader PNL is right here. You can see traders on Pika tend not to do amazing, which is a good sign for CPVs. Here, cumulative Vault PNL is fantastic. We're up almost to 1 million, whereas the losses here are over 500,000. And then it's a smaller market. This is on optimistic Ethereum, or optimism. I'm an old man. I show my age there. Here, They have a really nice oh, my head's in the way. You can see the 30-day net return. So this is a moving average as well as a daily net return. The 30 days around 29%. Now it needs to be said that that average is before the additional reward. So that's 30% before getting an additional 16.81% paid out in USDC and OP. So I like this one a lot. I wouldn't expect to get 30% usually. I would expect somewhere between 15 and 25%. But I will say recently it's been overperforming and it's been around that 20 to 30% range. So this has been a really cool one. I've liked Pika for a long time. If they crash tomorrow, I will feel terrible. But I would be remiss and I would be lying if I said I didn't like them. So great CPV. Again, this is on optimism. IPOR. This is one that's a little bit different. This one is for interest rate swapping. So they take an index of effectively borrowing and lending interest rates on major assets like USDC, USDT, and DAI, and they allow you to do interest rate swaps between those. And if you want to be the CPV or participate in the counterparty vault for those interest rate swaps, you can with pretty decent base APRs. Now, those base APRs are going to be paid partially in IPOR, the IPOR token, and you can lock up your IPOR to get higher yields, and those yields scale quite dramatically, quite quickly. But nevertheless, the base yields are pretty good. I couldn't find a lot of information on like the P&L here, and but what you could find is the LP profitability. So you can see that the base underlying CPVs, how they've done over time, most of them have done quite well. There was a huge hit to the USDT CPV, but for the most part, it is upwards and to the right, which is what you want to see. That's been pretty cool. I like IPOR. I think they're a little bit underrated right now, and so I am looking forward to see them sort of continue. I know I was supposed to set up like an AMA with their team. I'm supposed to talk to them, and I sort of missed that, and I feel bad for them. I think they think that I have slighted them, and I totally understand that. But the IPOR intern on Twitter, 100% worth following. Fantastic account, and doesn't just talk about things related to IPOR. They talk about things in DeFi, and they do a really good job of it. So follow the IPOR Twitter account if you have a chance. Again, not a sponsor. In fact, they might even be mad at me. All right, next one, CVI. So CVI has a CPV. This is called the Theta Vault, and effectively here you are the CPV for volatility for a volatility index. So when volatility is low, yields are high. When volatility is high, yields are low. In fact, you could even see negative P&L. But I will say we've been in incredibly, insanely volatile times for the past month or two, and CVI has still been net positive. This Theta Vault has still been net positive. I've been super impressed by it. It's not as sexy as like the 50 and 70% yields, but it has been super consistent. And I think I was netting somewhere around 12, 13% in the most volatile times when this thing should have been totally negative. So, and it's paid out in USDC. It's not paid out in some farm token like a lot of the other vaults are. So very impressed by this. They're building on top of this. It's there's a V2 that's also pretty impressive. I think CVI is one of the protocols to follow. They've been around for a super long time, but I think they're starting to gain some momentum. Anyways, got a few minutes left before I got to go pick up my son. Let's talk about Unidex. This one's a mixed bag because on Phantom, you could get a pretty cool yield on FTM. Let's see if they allow me to look at it. The APY is 70%. And that's pretty attractive yield for Phantom. However, the traders on the Phantom blockchain did really well. So people who were in this vault took massive hits for being the counterparty until I think one of the larger whales who was doing really well exited. And so, then it stopped happening. The vault that's been doing the best with the least risk, I guess you could say, is the DAI vault on optimistic Ethereum, Optimism, 51%. But again, you are exposed to trader P&L, and there is a withdrawal fee. So it's subject to a 3-day lock and a 6% withdrawal tax fee. Do keep those in mind. So to overcome a 6% withdrawal fee on 51% APR, let's see. You probably need about a week to overcome that before you're in profit from the yield. So it's a cool one. Unidex, they're building cool products. I like them, so I hope they do well. And I find this to be pretty interesting and something that I've certainly kept on my own personal list. All right, last one we're going to talk about is Vela. They have exploded recently in popularity in TVL. This is on Arbitrum. Interesting they chose Arbitrum. It's kind of a crowded space with GMX and gains, but Vela has done exceptionally well. So congratulations to Vela. Yeah, well done. They have VLP, which has an estimated APR of 113%. Now, one thing that you may be curious about is why this is so high. Well, one of the reasons could be because traders are using it maybe for wash trading or for potential airdrop mining, or who knows. And the reason I say that is because if you go to Vela Exchange, you can see the VLP has done very, very well. So well done, VLP. This is again denominated in stablecoin. So this is a stablecoin vault paying 113%, but exposed to trader P&L, and trader P&L has been very green. Traders have done super well, which makes you raise an eyebrow a bit on Vela. I'm not saying anything suspicious is going on. I'm simply saying that traders have done disproportionately well on Vela, and that may be something to consider when participating in the counterparty vault. So that beautiful looking 113 may not be exactly 113 as VLP intrinsically decreases in value due to the trader P&L. But fees are fantastic. A lot of revenue is being generated there, and I know many people in VLP who have been super happy with their investment overall. All right, guys, that's it for this video. Hopefully you understand what a CPV is, counterparty vault. It simply means that you are providing liquidity for people to trade, usually on some sort of derivatives exchange. And in doing so, you're exposed to the trader's P&L, as well as platform fees generally, and sometimes additional farming incentives. So if you want to learn more about CPVs, if you want to find the best possible yields in DeFi, if you want to talk to the greatest DeFi minds, go ahead and join the DeFi Dojo Discord. We would love to have you. Get the first month free. If you don't like it, don't pay for it. Hope to see you there. Thank you so much for watching. I'm Steven the Calculator Guy, and have a wonderful rest of your day.